When I did my mid-month dividend reinvestment in May, I discussed whether that was a good time to invest at all, given the falling and volatile market. At that time, as measured by the S&P 500, the stock market had fallen 14% with dividends reinvested in 2022, and that is shown on by the red dot on this chart. That was a month ago. Now it's a month later, and the market has dropped another 7% for a total loss in 2022 of 21% as of the close of trading on June 15th, which is the day the Fed raised interest rates by 0.75% as they are accelerating their efforts to combat inflation. As I speak now, on June 16th, the market is down another 3% today. Nevertheless, what I said last month still holds as far as I'm concerned, which is, if a stock or fund is high quality and undervalued and otherwise fits my needs, I'll buy it without too much worry that the market might go still lower. To me, this doesn't represent any particular kind of fortitude or ability to withstand fear. Rather, it's simply a matter of believing in the long-term success of my process. The process, as you know, focuses on optimizing dividend returns while pretty much ignoring what the market is doing. I can do that because dividends are independent from the market, and I focus on dividends. This slide shows that disconnect between dividends and the market in my own portfolio. The red line is my dividend run rate this year. It's up a little over 4% about halfway into the year now, and that's prior to making the dividend reinvestment that I'm going to talk about in this video. The blue line shows the total value of the portfolio. It's down a little over 8% as of the start of today, compared to the market's negative 21% return that we just saw a bit earlier. In other words, the market and my dividend income are going in opposite directions. So I'm going to go ahead and make my reinvestment this month, just as I do every month. Hi, I'm Dave Van Napp with the Dividends and Income channel. Before I get going, please click the thumb up button if you like this content, subscribe to our channel, and ring the bell if you want to get notifications when we post a new video, or if you get a response to a comment that you leave in the comment stream. Thanks very much. As you know, I am focusing on my small positions this year, building up the ones that I want to keep, and occasionally letting go of ones that I want to leave behind. The small position I'm focusing on this month is SCHD, which is the Schwab U.S. Dividend Equity ETF. I ranked dividend growth ETFs in April, and Schwab won, as it has in years past, as what I consider to be the best of the dividend growth ETFs. And you can see Schwab's position at the top of the list on this slide. Here in this display, I've pulled out SCHD from the rest of that table to focus on it and a couple of numbers in it that have changed since I did the ranking in April. The column called dividend yield has changed. It was 2.9% when I did the previous video. It's now 3.2%, and that is mostly because of the drop in the market since I did the video in April. Over near the second last column to the right, the assets under management for SCHD have fallen slightly from $34.5 billion to $34.2 billion. And again, even though SCHD has positive money flows into it, the decline in the market has brought its overall AUM, assets under management, down a bit since last time. For those of you who did not see the ETF ranking video in April, I just want to repeat some of the reasons that I like SCHD and why I ended up ranking it above the others. Number one, it selects stocks similarly to how I do it. For example, they don't have untested new dividend growth stocks or dividend paying stocks in it. They require 10 straight years of dividend payments to even be considered to be a position in SCHD. For another example, they screen for quality fundamentals, as I do. They favor higher yields, which I do. And they require a history of dividend growth, which I do. They don't do all these things exactly the same way I do them, but the fact that they do them at all in their own way is important to me and is one of the reasons I'm attracted to SCHD. Number two, they reconstitute their portfolio annually and rebalance it quarterly. The reconstitution takes place in March every year, and then the rebalancing is every 3 months after that. So March, April, May, June, July, August, and so on. However, so that's that leads to more churn and selling and buying in the portfolio than I would do in my own portfolio. But they do use buffers to favor holding rather than churning. So different candidates have to really exceed ones that are already in the portfolio in order for SCHD to make a decision at a reconstitution, say, to replace one stock with another. And I like that because I tend to like portfolios that don't have as much churn as many investors have who are tinkering with their portfolios all the time. Reason number three I like SCHD is that it has never cut its annual dividend. It's now in its 12th year of operation, and all it has is dividend increases to show in its record for the time since it's been open to the public back in 2011. Reason number four, its yield is right in what I consider to be the sweet spot of dividend growth investing, which is to say around 3%. Currently, as we saw, it's a little higher than that, 3.2%. And finally, it's displayed, and I think part of this is based on how it does change out stocks and rebalance stocks, it's displayed a fast dividend growth rate, 12% a year over the last 5 years. And that's a really good rate of growth at almost any yield, certainly for a 3% or so yielding instrument. That's a good rate of dividend growth. This display is from E-Trade, and it shows my current position in SCHD prior to making this month's dividend reinvestment. I highlighted the top, which is the summary of the individual items below it. From the individual items, you can see that I've made 4 purchases prior to today of SCHD. And they total 26 shares in the quantity column. I have about $1,800 invested in SCHD. And it's a small position in the portfolio. It's only 1.1% of the portfolio. I've been building it in small pieces since I began buying it. This slide is a little busy, but don't worry about that. I'll point out to you the things I want to bring to your attention. It shows SCHD's price, the purple line, and yield, the orange line, since I've been buying SCHD in this portfolio, and I began that almost a year ago. The 4 green dots are the dates that I purchased it in the past, so you can see what the price and yield was when I bought it in the past. The red dot at the far right of the chart near the top is today's purchase, and the yellow band is a conclusion I've reached after studying SCHD for several years, which is that SCHD is generally fairly valued when it yields around 2.8 to 2.9%. I drew that yellow band right on the line that equates to 2.9% yield for the orange line. And as I make this purchase now, you can see from the red dot that I'll be getting a much higher yield than that, 3.2%. And from the drop in the purple line, SCHD's price has been dropping because along with the drop in the general market. And so I'll be buying it at a lower price and higher yield than my other purchases in the past. So that's good. Okay, so I went ahead and reinvested my dividends for June in SCHD. This slide shows the details of my purchase. I'm building an existing position. I bought 5 shares with the money that I had available, so the number of shares goes up from 26 to 31. It cost me about $352 to buy those 5 shares, and adding them will add $11 per year to my annual dividend run rate in this portfolio. I didn't have all that much to invest this month. That's just based on the schedule in June of when dividends come into my portfolio. I always try to make these reinvestments in the middle of the month, and so rather than wait on more dividends to accumulate, I will just let them accumulate towards the end of the month, and they'll roll into next month's dividend reinvestment. This purchase brings SCHD in my portfolio from 1.1% to almost 1.4% of the portfolio. That's kind of how this sort of building grows. It's slow and steady, But in less than a year, I've gone from no position at all in SCHD to 31 shares. Okay, let's move on to the portfolio update portion of this video. To start the portfolio review, let's see what impact the purchase of 5 shares of SCHD has on my overall income in the portfolio. Before I made the purchase, the annual run rate of dividends was $5,654 per year, as estimated by Simply Safe Dividends. And after I add the 5 shares, it goes up by the $11 that we saw to $5,665. Converting those to yield on cost, which I just rounded to 1%, one decimal place, it doesn't move the yield on cost enough to change the 12.1% yield on cost to 12.2%. That will happen in the coming weeks, but it did not happen with this purchase. And just to be a pest and do this in every video that I talk about my portfolio, I just want to remind you what yield on cost means. The 12.1% yield on cost means that the portfolio is sending me cash dividends at the rate of 12.1% of the amount that I originally used to start this portfolio back in 2008. That is per year, and that dividend flow goes up every time a company raises its dividend or I purchase new shares. Okay, now let's look at those two sources of dividend growth. This table shows source number 1 that I mentioned, which is stocks increase their dividends. And on this slide, to make it shorter, I have now run January through May together into a single line at the top. In January through May, I got 16 increases. The average increase among them was about 5.8%. And among all 16 increases, I added $115 to the annual dividend run rate. Then the months starting in June are still broken out. I highlighted the only dividend increase that I found out about since I made the last video, which is Realty Income with one of their tiny 0.2% increases. That doesn't add even $1 to the dividend run rate. I'm hoping they will come through later in the year with a larger increase. They increase generally 4 times a year, sometimes 5, but usually 4. And they often do this deal where they give 0.2% of an increase, say 2 or 3 times a year, and then they give one larger increase, typically 2 to 3% for the large one. Down near the bottom in the light green area, you can see the 2022 total is that I have now received 22 dividend increases. By received means they've been announced and I know about them. They haven't all been paid yet. Totaling $164 in new income, which increases the dividend run rate from dividend increases alone by 3.2% so far this year. Okay, this slide shows reason number 2 that dividends go up, which is my making dividend reinvestments every month. And I've highlighted on this slide the reinvestment that I just told you about, which is buying 5 shares of SCHD in June and adding $11 thereby to the annual dividend run rate. And in the light green area at the bottom, the total added now so far through dividend reinvestments is $94 a year. And just to the right, year to date, that means I've bumped up the annual dividend run rate by 1.7% through this method of dividend growth. Here's my favorite chart for this portfolio. I like this one because it focuses on my primary objective, which is creating reliable growing dividend income flowing into the portfolio. The annual growth rate has been a little over 10% per year from 2009, which was the first full year of the portfolio's existence, to the end of last year, 2021. On this chart, I have added my first estimate for full year 2022, which I did simply by taking 2021's total and adding 8.5% to it. I believe that this is a conservative projection, but that's how I like to do it this early in the year. As the months go on and the dividends come in and more dividend increases are announced, I'll get a better idea as to what the year's final total is likely to be. And I put a yellow dot on the 2022 bar at the far right to show how much I've collected so far this year, which is around $2,100. So it's a little short of halfway through the year, and I'm a little short of halfway up that bar. If I were to move the dot up each month, it'll obviously reach the end of the bar at the end of December. This slide shows the portfolio's headline statistics at the end of the day after I bought the 5 shares of SCHD on June 16th. You can see that the total value of the portfolio has fallen from its all-time high in April when it reached almost $178,000 back all the way to where it was just about a year ago. The difference between 1 year ago and now is just a few bucks. And along with that drop has come an increase in the current yield to 3.5%. It's the same phenomenon in my portfolio that I showed you for SCHD before, and which is indeed generally true in investing. When all other things remain equal, if the price goes down, the yield goes up, or if the price goes up, the yield goes down. That does not mean that the dividend stream is changing at all. It's simply that yield is an equation, dividend dollars divided by price, so they move in opposite directions. My dividend run rate, however, as we've seen, continues to reach new record highs. I showed you that it's now at $56.65 a year, which equates to a yield on cost of 12.1%. I've collected 3% more dividends to date than I had last year at this time, and that amount would even be higher except that I doubled up on some dividends early last year, so they bumped up last year's total a little higher than it otherwise would have been, and that makes this year's comparison a little less than it would otherwise be this early in the year. And as I mentioned, by the end of the year, right now I'm projecting that I will have collected 8.5% or more in dividends this year than I did last year. Now, to finish up, here's the full portfolio. While you are looking at the portfolio, I'll give you these facts about it. I began it in 2008 to demonstrate dividend growth investing. Its initial value was just under $47,000. It's now worth more than $160,000, which is about 242% growth. That growth has been achieved with no new money ever being added. In other words, all growth is organic, by which I mean that it has come from market price increases, dividend raises, dividend reinvestments, and occasional trims and swaps that I make in the course of managing the portfolio. In 2008, I started with 10 positions. I now have 30. The annual income goes up at about 10 to 10.5% per year, and the yield on cost is now 12.1%. And I won't bore you by repeating my little speech about what yield on cost means and why it's important to me. With that, we've reached the end of the video. If you want to, well, first I want to say thanks to those of you that are still with me. If you want to look at the portfolio in detail, obviously pause the video while it's on screen, and you can take a screenshot if you want, or just look at it on your screen to ferret out any details that you want about it. And with that, I will say goodbye to everybody. Bye-bye.